Hello, FX Limit family. Welcome back to our channel, where we dive deep into the complex world of finance and unravel its mysteries. Today, we're going to tackle an incredibly relevant and fascinating topic, analyzing the impact of geopolitical events like trade wars or political instability on currency values through fundamental analysis. So, let's get started. When it comes to understanding currency movements, geopolitical events play a massive role. But how exactly do these events influence currency values? That's what fundamental analysis is all about. It helps us grasp the economic undercurrents that drive currency markets. First things first, let's talk about trade wars. These are not just about imposing tariffs, they're about the sentiment in the market. When a trade war kicks off, it often leads to uncertainty. Businesses don't know how their costs or supply chains will be affected, and investors start getting jittery. This uncertainty can weaken a country's currency because investors tend to move their money to what they perceive as safer assets. For example, if country A imposes tariffs on country B, investors might worry about country B's export-driven economy. This could lead to a decrease in the value of country B's currency. But it's not always that straightforward. Sometimes, the country imposing tariffs might also see its currency weaken due to retaliation fears or global economic concerns. That's where your analysis needs to be nuanced and thorough. Now, let's pivot to political instability. This can range from elections with uncertain outcomes to full-blown political crises. Political instability often leads to economic instability, and that's a red flag for currency investors. When a country's political future is uncertain, its economic policies, including those related to its currency, can become unpredictable. Investors, fearing this unpredictability, might pull out their investments, leading to a fall in the currency's value. But how do you analyze these situations? Start with the news. Keep an eye on global news channels, read financial news websites, and follow reliable financial analysts on social media. You need to understand not just what's happening, but also what the market thinks might happen. Market sentiment is a huge driver of currency values. Next, dive into economic indicators. This includes looking at trade balances, GDP growth rates, inflation rates, and other economic data. These indicators can give you a sense of how a country's economy is performing and how it might be impacted by geopolitical events. Another key aspect is central bank policies. Central banks play a huge role in setting currency values. When facing geopolitical upheaval, they might change interest rates or engage in other forms of monetary policy to stabilize the currency. Keeping track of central bank announcements and policy changes is crucial for your analysis. Now, let's talk about applying all this information. Say you're analyzing the impact of a trade war between two major economies. You'd look at how this war is affecting trade balances, investor sentiment, central bank policies, and then try to predict how these factors might influence currency values. Remember, in the world of currency trading, it's not just the reality that matters, but also the perception of what might happen. This is why fundamental analysis is as much an art as it is a science. You're trying to read the mood of the market and predict how different players will react to geopolitical events. In conclusion, analyzing the impact of geopolitical events on currency values involves a blend of keeping up with the news, understanding economic indicators, and interpreting market sentiment. It requires you to be always alert, always learning, and always ready to adapt your strategies based on new information. That's it for today's deep dive, FX Limit family. We hope this video has given you a clearer understanding of how to analyze currencies in the face of geopolitical events. Don't forget to like, share, and subscribe for more insightful content. And remember, keep analyzing, keep learning, and stay ahead in the game of currencies. Until next time, keep those financial minds sharp.